Hey, what's up, crypto heroes? Joseph here. We're going to be talking about 5 indicators you need to use on your charts. What we're looking at here right now, we're looking at Bitcoin versus US dollar, so BTC USD. You can do this on any chart, of course, you want to, but today we'll be looking at Bitcoin. So I want to be able to help navigate through a stormy sea because cryptocurrency stocks and all these other things can definitely feel like you're in a stormy sea, especially if you don't know what you're doing. So with the right tools, you can easily sail smoothly, right? So today I'll teach you how to use the top crypto indicators that professional traders rely on and to make informed decisions. So we're going to dive deep into the relative strength index, which is RSI, moving averages, golden and death crosses, the 25, the 50, and the 200 EMA, the MACD, the volume, Fibonacci Retracements, and Bollinger Bands. So some of these are quite easy to use, and other ones will take a little bit more time to get used to. But let's just kind of dive in and take it step by step. So the first one we're going to talk about real quick is going to be the relative strength index. How you're going to find this? Right now I'm on gocharting.com. This is a really great one because it's free to use. You can upgrade, of course, to a higher upgrade, but you can use tons of these indicators at no extra charge to you. So I would definitely start here probably, unless you want to go to like TradingView, which also is a great resource. You can do some really great charting there. Just that you can't use as many indicators on their free version. So how do we find indicators on this chart? We need to come over here to these 3 dots, which is called widgets, and we need to click on whatever we want. So here's indicators. Of course, you see right here, now it says templates. We click on it. Now it says study, because indicators are like your study tool. So we clicked on that. Let's go over here, study, and we click on RSI. We look up RSI, relative strength index. Perfect, we got it, which is right here. Now the nice thing, once you have this all saved, you'll come over here, which is called layers. This is going to layer your charts. Main panel, which is your candlesticks, which are these red and green candles right here. Then you have your exponential moving averages. I have 3 on here, 25, 50, and 200. We have the Bollinger Bands, so I have all that saved. We have the volume. Volume I don't have on here, but it's there. If you want to look at these things, I'll just show you. Click on this, and it will bring it up. See that green line? That's the 25. There's the 50. So I'm going to keep those off for now, though. And then we have the relative strength index, as you see here. Boom, and now it's off. Now it's on. All right, and I think that's it for now. Perfect. And so let's go ahead and talk about the relative strength index real quick. Before you exit out, you want to come here. You put it at 70, which is the upper band. The middle is 50, and the lower band is 30. Press apply, and then you press that. Okay, so why is this important? So why use this indicator? So RSI helps you identify when an asset is overbought. And overbought means it's above the 70 line right there. See that 70? So it's above it, meaning prices have gone up. So let's see here. We got prices going up, up, up. Now it doesn't have to be like we're at 70 still, so that's still overbought. This is really overbought right there. Prices went from way down here to up here, which is overbought on the RSI. So, and then oversold is below 30. 30 is that bottom dotted line there. And if oversold, it means it's people are selling, maybe scared, something happened, just whatever might have happened in the crypto charts, the crypto universe. So let's just see here how this works, okay? So if this is coming down, prices are dropping. This is also dropping right here, right? So you can see it on the screen. That little line going up. So it tells you exactly where things are happening, right? So it's down here at 30, which is also after it's dropped. That's an indication to us that we probably want to start buying this, because most likely if it's oversold, people are selling like crazy. People are going to start buying it up again, right? That's just kind of how the markets work. It go up and down, up and down, up and down. And if you can't just trade off of one indicator. It's not safe. It's not safe. It's not smart to do that. So that's why we're going to go over quite a few of them today. But here you have this one. Okay, we go up. We almost touched the 70 up there. And so if that's the case, we might want to sell. But if we didn't, if we want to wait for that 70, we come back down. It's getting close to that 35 or so. And then we actually do go up and touch that 70. So we would probably want to sell out here, right? Anyways, it goes over and over and over. Okay, here's an example that it doesn't always work in your favor all the time with just one indicator like RSI, because you got 30, 30, 30, but it's going down, 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 down. So if you bought here, you would lose. You bought here, you would lose more, right? You keep on losing more and more until you get down to this one, right, which is the bottom of the market. And then if you bought there, of course, you would have a nice little increase up here. And then you might want to sell once you get to that 70, which would be buy here and you sell right there. So this is called the RSI, Relative Strength Index, and that's how you would use it, okay? So why does this work? So markets run on emotions. It's kind of funny to think about, but it does. Greed drives prices up way too fast, and fear drives prices down. So the RSI captures these extremes and giving you a clear picture of the markets, how they kind of correct themselves up or down. So let's go to the next thing here, which is going to be called moving averages. How to find that? You press on study. You can type in moving averages. Right there, exponential moving averages. That's how you find it. You click on it. This one you might want to click on it 2 or 3 times, but I'm going to come over here, go to layers, and we're going to add them onto our view now. Boom, boom, and boom. Green, blue, and orange. I like using those colors. So let's just kind of scroll in here just a little bit, so make this a little bit easier to see how we can line these everything up here. All right, sounds good. So now this is on a 4-hour chart. So what that means is all these let's just go a little bit further in. Every one of these candles is worth 4 hours of time, okay, as you're going through. Then down here, you have your months and your days. Okay, so let's go back over a little bit. Let's make sure we can look at some good price action here. All right, so we have right here the 25, which is in green, 50 is blue, 200 is orange. And how these kind of line up for you is you would take the 25 is kind of like your early warning system that prices are going to go up. So let's just take a quick peek here. So we had this overbought here on RSI. That would probably signal to us saying, hey, pay attention, it's probably time to get in. So if we would have got in here, purchased our bags, we then would be waiting for this cross, the 25 crossing the 50. Okay, that's another indication that prices are probably going to go up. Now, they didn't go up right away because it came back and touched again, right? Now, right here, it did not touch back down to 30. It was like 35 or so, which can be pretty common sometimes as well. But what happens again with the green line, the 25, it crosses up again, okay, right here. And we could have, as we were buying back here, we're already up pretty significantly there. But what happens here is the 50-day EMA crosses above the 200-day EMA. So what this means is that prices are probably going to be more prolonged up because this 25 crossing the 50 sometimes is a short-lived upward action, right? It's not that long. But when you got the 50 crossing above the 200, it actually acts a little bit more long-term price action here. As you see, it's drawn out. That gives us more confidence that we might be able to hold this for a little bit longer to get better profits. Over here on the screen, and these are all these little different tools you could use. This one here is price range. So let's just take a peek real quick. If we would have said, okay, got this notification here, we bought in right there at the 30, and then we didn't sell until we got to right here, which is overbought, right? And so we didn't sell till right there. Let's take a peek. Let's go down. That's a 16% increase, right? So that's pretty great. If you had $1,000 in there, you get $160 back. And so, that would be pretty great, right? So let's take a quick peek here. You go right here, and We could have sold just right here if you wanted to. So we got this down here, the 30, which we just bought. And we take it up here almost to the 70. So maybe we would want to get out. That's a 10% increase. That's on May 1st and then May 5th. So in about 4 days, 5 days, we got a 10, 11% back. Okay, not crazy, but definitely would work. Now, if we wanted to, we could wait for these things, right? Like I just mentioned before, we could wait for the 50 to go above the 200, and that would signify to us that we probably have a much higher and longer price action to go, where prices are going to go up. So that's pretty awesome on a shorter time frame at 4 hours. So let's just take another peek here, another example. Okay, prices are down. We get a notification. RSI is at below 30. We purchase, get in right here. The 25 is now crossing above the 200, or sorry, the 25 EMA crossing above the 50 EMA right there. And then we have the 50 crossing above the 200. So if we were to purchase right down here, which would be right here, and we didn't sell until we got to the 70, which would be right here. So that would be a 14% increase right there. Okay. Now, you see, we have the green line still above the blue line, right? That's signifying strength. We also have the blue line that just crossed over the 200, right? 50 over the 200. That's also signifying strength. So if we're seeing these two things line up, maybe we don't sell right here at the 70 because it's seeming like it's pretty strong. Maybe we would wait a little bit and we would see what happens, and we could ride this thing up a little bit more, right? And so that would be a pretty awesome trade. Of course, we're seeing this as a downtrend here on the RSI, but we're still seeing higher prices, right? And they're still in that 70 zone, which is overbought zone. Okay, so there's a couple of different ways to do that, but when you're seeing these lines, we're seeing your 25 above the 50 and the 50 above the 200. That's still showing some strength there, right? So perfect. So let's just take a look at one more example here. Let's just go a little further into the future. All right, so we got all this downward action. This is that time I just mentioned it to you that you would have lost a few if you would have kept on buying in all the way through here, but you could have dollar cost average in, bought some more down here. Now your 25 is still below the 50. As soon as it crosses, right there, you got to cross. Then a little bit further down the road, we got the 50 crossing the 200. That signifies to us that we're probably going to be going up here. So hopefully we got in right down here. We take this thing, we ride it up, and maybe once we get out there, right when it touches the 50, or sorry, the 70, and let's just take a look. If we did that, if we caught that pretty nice, up to the 70, look, that's another 12% right there, right? It's not too long of a time frame. So these are called moving averages. These are really great to have. We can go over those quite a bit. And there's also different time frames that we got on the daily, right? We can change to our daily time frame, and it shows us more of a bigger time frame, right? And these things mean more significant price action movements overall. We'll get into that a little bit later. But yeah, so let's move on here real quick. Looking like the relative relationships, right? So all these different type of moving averages. When the 50-day EMA crosses above the 200, so right here, 50-day, blue, crosses above the 200, orange, it's called a golden cross. And when the 50 crosses below the 200, which we did just slightly right there, that's called a death cross, but that didn't really happen, right? Death cross means prices are probably going to be going down quite a bit. But it was kind of a little bit of a fake out, kind of making everyone a little bit scared there, right? So, but that's called the death cross. Let's see if we can find one here real quick. Right here, look. Here's that 50. It's crossing below the 200, and boom, we get confirmation that this is in a downward trend, right? The 50 stays below the 200 for quite a long time. The 25 is below that as well. That means that's signifying weakness on the charts. Okay, perfect. So that's our moving averages. So far we did relative strength index down here. We did the moving averages, 25, 50, and 200. The 70 right there means overbought. We probably want to consider selling. The 30 or below means oversold, and we want to consider buying at that time. All right, so let's look at MACD. And you would come back over here, type in MACD. It's already there. MACD. There we go. Let's just check this off real quick to make this a little bit bigger. See how this works. Okay. So let's just see here. All right. So when the blue line right there, and you can click on this and see, this is the 12, 26, and 9. Yours should also be set up just like that. So the 12, right, is the blue line right here. When the blue line crosses above this orange line, that's signifying to us that there's some strength happening. Okay? As you see, blue is above, we're going up. When blue line crosses below the orange line, 26, that means we're going slightly down, right? We do make a newer high, but it goes all the way down to here again. It won't signify strength until we cross that blue line going upwards. So we can definitely use this indicator here to help us get into the market or to just give us more confidence into our decisions. So once we cross there, that most likely means we're going to go up. So look, we didn't get in the lowest part here, right? We could have if we're using relative strength index because that was oversold. But we're also getting now this confirmation right here, which is around right here that we are the momentum is going up. So that's going to give us more confidence in our decision down here. And now all these things are also happening back here. We have the 50-day crossing the 200. We already have the 25 crossing the 50. So strength again right there. We're oversold, okay? And our momentum is now changing to the upside. So there's 3 or 4 things that are making our decisions that we just got in, maybe back here, ultimate. We're like, oh wow, this is looking great, right? So there's the MACD. The MACD, just real quick, is just like I was mentioning, is the momentum indicator that it compares the 2 EMAs, the 12 and the 26 day, and it plots the line difference. So why is it important? You know, MACD shows you when momentum is shifting, making it easier to spot trends changing earlier, right? Now it's not as early as, of course, our RSI or sometimes our EMAs, right? But all these things stacked on top of each other definitely helps out. So why it works, MACD captures shifts in momentum that might not be obvious on price charts, helping you avoid emotional decisions and focus on underlying trends. All right, so let's go back over here to our layer. Look on volume. Let's click on volume real quick. Okay, and here's our volume. Okay, so the green candles mean buying volume. You see green going up. The red candles mean selling. People are selling that day. Lots and lots of people selling. And so that's all that really means. So you can see if people are losing interest, the volume's going down. This means there's not as much money coming into the market, but the volume now going back up. And the volume is positive in green, but if you have a red volume candle above a green one, that means there's a lot more people selling that type of that day, right? Or that hour, or whatever it might have been, right? Whatever chart you're on. Right now we're on a daily chart. So that's a really great indicator. Now you don't always have to have that on. Sometimes I'll just keep that off on my chart here. And then we also have our Fibonacci retracements. So Fibonacci retracement, let's just go over here. It's right there. And let's see here. Let's just take, give me 1 second. Let's go here, top to bottom, right there. And then we can zoom in real quick just to see what happens. Okay, so when this topped and we're crashing, okay, we're making this green candle now. This is looking like this might be the bottom, right? And so we take it to the top. We come down here, we bring it to all the way to the bottom. And then it shows us all these different lines, the 236, the 382, the 50, and the 618, 786, and then 100. These are different levels of confidence, of interest. So a lot of times when you have a crashing cycle, a crashing like this, prices will still go up to about the 618 or the 50. A lot of times it does that. So you can, if you wanted to get in here, because most likely RSI is also down to the 30s. We also have this all the way down here, which is signifying that we're probably the best time to buy, and our all of our moving averages, right, as well. So, but yes, you would use this as trying to figure out when do I want to maybe sell. Maybe I'm going to put it right here, and that would be around $55,000 on Bitcoin, or 58,000, right? So you would purchase down here at 47, sell right here possibly at 56, or take a gamble and sell at 58. But you could set your sell orders up here because you have this to tell you exactly maybe where prices might go. So that's a really good one too. Let's just see if we can find another good example here of how we could use that. All right, so let's right here. So we went up, right there. So let's put it up there real quick. Let's bring it all the way down here. Now this isn't a bear. This isn't, I mean, so this is kind of more of a bullish, right? The other one was kind of bearish, right? This is more of a bullish thing. So in the bullish action, it's most likely going to be going higher, right? We're changing momentum. Momentum's going up. We're above the 200, still strong. We're still sitting pretty strong after we made the golden cross back here, right? On the 50 crossing the 200, the 25 still above the 50. So everything's still looking pretty bullish for us. So we want to see where this might take off to. So as you're going up, you might use these ones up here better. The 161, the 261, and this would give you some confidence as well to where maybe you could take some profits going up in the bull run, right? So setting some sell targets. Perfect. So that's how you use that. And then let's look at the Bollinger Bands real quick. Let's take off the MACD. Let's put on the Bollinger Bands. And let's get the strength index back on there real quick. The RSI. Oops, RSI, perfect. And make sure when you are getting this, you always change it to 70 and change it to 30 on the bottom. Press apply. Great. All right, so here's the Bollinger Band. Here's the top of the band. Here's the bottom of the band, and then the middle of the band, right? Right in the middle. Well, let's take off those moving averages super quick, just so we don't get confused of all these different things going on right quick. All right, there it is, that moving average right in the middle. So let's get this a little smaller. And let's just click on Bollinger Band. We got window size, multiplier, SMA, perfect. Everything looking good. All right, so when we have the price action going to the top of the Bollinger Band, that means it's getting pretty bullish, and most likely as we get to the top, we're going to be selling off. That happens quite often, right? So you're seeing here go up. We're at the very tip top. Once we touch it, we kind of sell off. We touch it, we sell off a little bit. We touch it, we sell off. We touch it, we sell off. Okay. So it's a good indication of if we touch on it, if we're at the top, we're most likely to see a little bit of a pullback or sideways action. And during a bear market, during the downtrends, because that's during more of like a bull, right? Strength. This is the down. So when we're touching it down here at the bottom, most likely we're going to see a little bit of up, touch, go up. We touch it, we go up, touch it. Now this goes way down, of course, and this is like way oversold. Right, coming down here. So we're down here at the 30 now, way oversold, and it stays like that for a while. So we could have got in here if we wanted to. We could have rode this up a little bit to the top of the Bollinger Band, which saying, oh, okay, this is probably overbought. Even though we're only at the 50, we could use this as an indication too, potentially. And even though we're at the 50 on here, doesn't mean we're overbought yet, right? So, but the Bollinger Band does tell us that, so we can make a better decision with the Bollinger Band on to sell. Buy here, sell here. So it's a pretty good tool, and I would definitely get used to it because it definitely helps you out quite a bit. And the shorter or the smaller we get with it, the more likely we're going to have a bigger move up, right? Move up or move down, one of the two. So we see here, there's the 30, it's way below the Bollinger Band. We're at the 30 on here. That's it. That would probably give us a good indication that we need to start buying on Bitcoin. And then as soon as we start seeing it go, this price actions, keep on hitting these bottoms, then it starts going up again, right? Now, let's just take off the Bollinger Band real quick. Let's put the moving averages back on. See if we could have caught something here pretty easily. So we have everything. The 25 is below the 50. The 50 is below the 200. That's weakness, right? But look, we got 30. So let's start buying Bitcoin because we're in the 30 oversold. Then we want to see, okay, when can we see the 25 crossing the 50? That's our first strength, right? And then when do we see the 50 cross the 200? That's the golden cross. What that means is that we're going to have a higher and a much longer price action going up, just giving us more confidence than we bought back here that we're going to see more price action going upwards. See right here, we did have another oversold. So we could have got in there if we wanted to, if we were paying attention, and we could have rode this up because the 25 didn't cross the 50, and the 50 didn't cross the 200. That's signifying we still have strength in the market, and we're most likely still going to be going upwards. So we have confidence that we could get in here and take the next ride up. Let's just take a look. If we would have bought right there, took that right up. That's a 50%, right? 50% move right there. So that would be pretty awesome. So why use the Bollinger Bands, what we just were looking at? So they adapt to the price movement, right? Showing when the market is quiet or heating up. So how we use them is when the bands squeeze together, it's a sign of low volatility. A band breakout might be incoming, right? So if it's like kind of squeezing together like I was showing to you, then a breakout might be incoming. And let's see. Perfect. Really squeezed in, right? The squeeze, and then boom, we broke out right there. And when the price touches the upper band right here, like I was just mentioning, it's often overbought. And when it touches the lower band, we're oversold, just like I was mentioning before. I just wanted to show you again here with that on there. So why do these work? The Bollinger Bands reflect how much the price is moving in relative to its average. Traders often use this to gauge the market's next move. Where's it all going? All right, so thanks so much. Just to recap, we went over the RSI, which is right here. The 50 is overbought, we sell. The 30 is oversold, we buy. Right, the middle, we can use those potentially in different types of bull run or bear. Right, moving averages, we have make sure this is gone. We have the 25, we have the 50, and we have the 200. I like using the green for 25, 50 blue, 200 orange. Use them to track trends and watch for golden and death crosses. Shifts, prices are going to keep on going up, or prices are going to keep on going down. The MACD, spot momentum shifts in divergence. The volume, of course, confirms strength of the trends that we're in. Fibonacci Retracements shows you kind of where you could maybe potentially put some targets of where prices are going to go up, or maybe prices where targets are going to go down. The Bollinger Bands, which predict volatility and breakout opportunities. So I might make a video just for one of these as we go along. One maybe like 2 to 3 minutes for each one. But here today we did kind of a big overview of all these different tools. How to find them, you go up here, study. If you don't see the study, you need to come over here, click on indicators. All of these different tools over here, you can actually find these. You click on this little draw tool, click on lines and measures, and you find them all over here. If you want one to show up on your little tool taskbar, you make sure you put a little heart on it so it shows up. Ones I like is the arrows, the arrow markers, the vertical lines, the horizontal lines, the dates, and the price ranges. And then I like these. You can go like this. You can see the prices are for that little spot. I like drawing little boxes of what's going on in this on here. Got the arrow. You can point. You can go ahead and you can write that. You can go Fibonacci retracements like this. Here's a line. You can then draw a line all across. It shows your prices over here and where that line's at. You can draw an actual line, like a trend line, going up and down. And that's about it. I mean, there's lots of other tools you can put on here too, but that's the majority of them. This is how you change your daily candles, right? You want a day candle, you want a 5-minute candle, 4-hour candles, weekly, monthly. You can choose monthly candles. Let's get rid of all these things. Perfect. Things are getting in our way here. All right, and each one of these candles is a month. Considers 1 month. Each of the candles now is 1 week, and all these are daily candles, 24-hour candles. So that's how you use that. You can change how you want to see your lines. You can do like an actual line. I wouldn't suggest that really. You can't your candlesticks, which that's what I use the most of. Got hollow candles, which is kind of cool. And then you have, all types of these candles. You got these ones as well. People might use these for different reasons. I stick with these ones or my hollow ones, one of the two. They look the best to me, and so I think that's really cool. All right, well, thanks. I know this is kind of a long one, but hopefully you learned something new. If you do study these and you use them quite often, you'll be able to have a much better time with your crypto investing. I'm going to be showing how to use these. I'm going to be posting, trades and stuff like that, and when I'm getting in and everything, right? So I wanted to show you everything how this works. All right, take care.